Hey guys, it is Julie here with TipRanks. Today we're taking a look at 4 strong buy stocks that are priced under $20 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Now last week we got some great feedback on our video with stocks under $10 per share. So sticking on theme, today we're going to look at 4 companies all priced under $20 per share, coming in with a strong buy consensus from Wall Street analysts. We'll be taking a look at what these companies do, what their stock has been up to lately, and of course what Wall Street analysts are predicting for their stock's future. Now we came across today's stocks using the TipRanks stock screener. You can find the stock screener for yourself over on the TipRanks website under Research Tools. We set several filters today, looking at medium to mega market caps, stocks that have double-digit upside potential, and a strong buy consensus from all analysts as well as the best analyst consensus. I also wanted to make sure it traded on a couple of the major stock exchanges here, and that will populate our list down below. Now I sorted by price so that we could take a look at those priced under $20 per share. First up on our list today, we're taking a look at Stellantis. Their stock trades under the ticker STLA, currently priced at $18.53 per share. The stock has seen growth of 38% year to date, and over the last 3 months is up 15%. They do currently score a 9 out of 10 on the TipRanks Smart Score, and have seen some increased hedge activity by 5.5 million shares in the last quarter. Stellantis is a pretty big automotive group, built up of 14 different vehicle brands. Some of those well-known brands include Alfa Romeo, Chrysler, Dodge, Fiat, Jeep, Maserati, and Ram. Like many automakers, they're also focused on electrification as they're setting course for 100% of sales in Europe and 50% of sales in the US to be battery electric vehicles by the end of this decade. They're also working on their hydrogen fuel cell technology, intelligent vehicles, and autonomous driving, saying that they have one of the best Level 2 autonomous driving solutions on the road already. Just yesterday, Stellantis announced that they plan on establishing a second battery manufacturing facility here in the United States in a partnership with Samsung SDI. The location of this second plant has yet to been confirmed, but their first one will be coming up in Indiana as well, which is targeted to launch in the first quarter of 2025. This second facility is targeted to start production in 2027. Stellantis is scheduled to report their earnings tomorrow on July 26, and they only report semi-annually, so we have not heard from them since back in February. For their second half of the year, analysts are anticipating earnings per share of $2.94, which is a notable increase from last year's $1.45. We can see that they beat expectations in the last couple of quarters, so hopefully we'll see the same tomorrow. Their stock does currently have 10 analyst ratings, coming in as a strong buy with 9 buys and 1 hold. And the average price target comes in at $23.79 per share, which would be a growth potential of 28% from current prices. Our most recent ratings came in the last couple weeks, ranging from an upside of 5% all the way up to 50%. We'll see how analysts reiterate price targets following tomorrow's earnings. Second on our list today, we have Nomad Foods. With a market cap of $3.14 billion, their stock trades under the ticker NOHD, currently priced at $18.24 per share. Now, over the past year, they are down slightly at nearly 5%, though up 3.5% year to date. They're fairly flat in the last few months. Nomad Foods is Europe's leading frozen food company and is one of the largest in the world. They have a portfolio of leading niche brands, including Bird's Eye, Findus, and Iglo. They manufacture, sell, and distribute a range of branded frozen food products across 13 different European countries. And their brands are often share leaders in their respective markets, ranking number 1 or number 2 in market share across 90% of their core portfolio. Their Q2 earnings report will be coming up on August 10th, where analysts are anticipating earnings per share of 41 cents. This follows their Q1 earnings report back in May, where they came out with a 9-cent earnings per share beat at 51 cents per share. Plus, their revenue came in at €775 million, which was a 5.8% year-over-year growth. Now, the analyst ratings on the Nomad Food stock are a couple months old, as they all came in May following that last earnings. But we do have 6 unanimous buys. And an average price target of $23.50 would be an upside potential of nearly 29% from current prices. And those ratings are all pretty closely grouped here. We have a range from 20% to 37% upside. And again, we'll see many analysts reiterate this following that August 10th report. Third up, we're taking a look at Cenovus Energy. Their stock trades under the ticker CVE and is priced at $18.23 per share. They've seen growth of 5% over the past year with some ups and downs and are up 7% in the last few months. And these guys also score an outperform rating on the TipRanks Smart Score and have seen some notable insider trading activity. Their executive vice president made some informative buys in the last couple months with over $1 million Canadian. Founded back in 1881, Cenovus is an oil and gas company that is headquartered in Calgary, Canada. Their activities include development, production, and marketing of crude oil, natural gas liquids, and natural gas in Canada. They operate through 4 segments with their oil sands, deep basin, refining and marketing, and corporate and eliminations. Their next earnings report will be coming up in just a couple of days on July 27th. Analysts will be anticipating earnings per share of 33 cents, which is a decline from last year's 90 cents per share. And Cenovus has had a spotted track record here of hitting those analyst expectations. Nevertheless, Wall Street does currently rate them a strong buy, with 9 current analyst ratings coming in with 7 buys and 2 holds. Their average price target of nearly $22 per share would be an upside potential of 20%, and we do have ratings coming in just in the last couple of weeks from some 5-star ranked analysts here as well. On the low end, we do have a hold with an upside of 8%, and the high end an upside of 37%. And our 4th strong buy stock under $20 is CNH Industrial. Their stock trades under the ticker CNHI and is priced at $15.72 per share. Now, they have seen some impressive growth of nearly 35% over the past year and are up 14% in just the last 3 months. They also have an outperform rating on the TipRanks Smart Score and have seen some very positive crowd wisdom and increased hedge fund activity, with holdings increasing by 1.9 million shares in the last quarter. CNH Industrial designs, produces, and sells agricultural equipment and commercial vehicles. The company was founded over 180 years ago, back in 1842, and their brand names include Case IH, New Holland Agricultural, and New Holland Construction, and their Case Construction Equipment. The company also invests in agricultural and construction innovation technologies, including alternative propulsion, digital, artificial intelligence and robotics, automation and autonomy, and full value chain disruptors. And we have yet another company that will be reporting earnings this week, as their Q2 results are scheduled for July 28th. Analysts will be looking for earnings per share of 48 cents, which would be a 5-cent increase year over year. And they do have a solid track record of exceeding those analysts' expectations, so we'll see how things look. Their strong buy rating from Wall Street comes with 8 buy ratings and 1 hold, and an average price target of $18.48 for an upside potential of 17.5% from current prices. The most recent ratings do come from some 5-star analysts in the last couple of weeks. On the low end, we have a hold from a couple months ago with an upside of 5%, and on the high end, one from a few months ago at 33%. So there we have 4 stocks, all priced under $20 per share, coming in with a strong buy consensus from analysts. Let me know your thoughts on these companies in the comments down below. What one do you think has the best growth potential? I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at and providing some information and entertainment. Please make sure you always do your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.